Tesla earnings are out. Stock is flat right now. This video is going to provide an update on earnings. Also going to look at a chart. I'm going to tell you where the stock could go and some commentary. I need to interrupt you here. So I made this video right after earnings came out and then more information came. The earnings call happened and the stock went really from flat. Actually, it was up a little bit. Then it was flat. Now it's down about 5% after hours, and I'm going to share the reasons why. So watch this video. It's going to provide all the information from the earnings, and I'm also going to provide some extra commentary. I'm going to edit some extra commentary in the video as well. This is worth your time. Thanks for watching. And the market cap on Tesla is about $912 billion right now. That PE ratio, again, that's 12 months trailing, is 85.75. 52-week low, it was $101.81. 52-week high, $314.67. And year to date, Tesla's up almost 170%. So the big focus for this earnings is going to be margins and the impact on those price cuts and those tax credits. And that's really what analysts are looking at. So the headline, Tesla books $24.9 billion in revenue with margin declining after price cuts. Tesla posted an all-time high quarterly revenue, but operating margin dropped to 9.6%. So Tesla non-GAAP EPS of 91 cents beats by 9 cents. Revenue of $24.93 billion beats by $200 million. Now the GAAP net income was $2.7 billion. That's an increase of 20% from last year. And earlier in the month, we got deliveries from Tesla. They were very strong. So for Q2 2023, we had total deliveries 466,140 and total production was 479,700. Now these numbers beat analysts' expectations and deliveries rose 83% year over year. That's a big number. So these deliveries were higher than expected. That's partially driven by those incentives, those tax credits, and those discounts. And correspondingly, you had operating margins come in a little bit lower, and this was the concern going into earnings. So operating margins came in at 9.6%. That's the lowest for at least the last 5 quarters. Total gross margin came in at 18.2%, also a low for that same period. So net income of $2.51 billion on revenue of $23.33 billion. So looking year over year quarter. So during the second quarter last year, Tesla reported net income of $2.27 billion on $16.93 billion in revenue. So that revenue is quite a bit higher, of course, more deliveries. That net income is higher from $2.27 billion to $2.51 billion, but those margins are lower. And part of that's also from research and development. So Tesla is spending money on R&D, $943 million. That's an increase from $771 million in that first quarter. Part of this has to do with AI and other projects they're investing money in. And we'll talk more about that here later. Now, I always do these videos right when I get the information. We don't have the earnings call yet. So the stock could be volatile. It could go higher or lower depending on the commentary. Shareholders are also hoping to get an update on Cybertruck as well. Okay, so again, margins. We got to focus on margins here. So operating margin came in at 9.6% of sales, and that's falling from 11.4% in that last quarter. Other factors impacting profitability were the cost of production ramp up, sales, an increase in operating expenses driven by Cybertruck, AI, and other large projects, as well as negative FX impact. So total GAAP gross margin was 18.2%. Now that's compared to 25% a year ago and 19.3% the prior quarter. So when you look at that number, it's down 1.1% from the prior quarter. I think some people might have thought that'd be worse. But with that said, analysts had forecasted gross margins at 18.7%. So it did come in a 0.5% lower than that expectation. Now, CFO of Tesla earlier this year said that FY23, they expected to remain above 20% with average selling prices in the high 40K range. But this recent round of price cutting has altered that margin story, as well as those additional expenses and investing in the future. And this is something interesting here. Solar fell 38% year over year, but storage deployed was up 222% year over year. Now, that is interesting. Solar down 38%. Is that going to impact companies like, say, Enphase? We'll have to see with earnings. Now, this is the investor deck, hot off the presses, right from Tesla Investor Relations. Profitability, 9.6% operating margin we talked about. So that GAAP operating income is $2.4 billion, net income $2.7 billion. Operating cash flow of $3.1 billion. And they do have free cash flow of $1 billion. They also increased their cash and cash equivalents. They have $23.1 billion. So record quarter on many levels with our best ever production and deliveries and revenue approaching $25 billion in a single quarter. We are excited that we're able to achieve such results given the macroeconomic environment that we're currently in. Our operating margin remained healthy at approximately 10%, even with price reductions in Q1 and early Q2. This reflects our ongoing cost reduction efforts, the continued production ramp-up success in Berlin, Texas, and the strong performance of our energy and services and other businesses. It also talks about AI, their commitment in being at the forefront of AI development. In conclusion, they're focusing on cost reduction, new product development that will enable future growth, as well as continued product improvement and generation of free cash flow. So this is a very positive quarter on many aspects. It's really the margins that's the focus here. They beat on both. Solid free cash flow, cash and cash equivalents, very solid. They increased that by 0.7 billion. You can see like total automotive revenue. So this is going back to Q2 of 2022, and this is this recent quarter here, Q2 of 2023. So you can see that scale nicely from 14,602 to 21,268. And these numbers are in millions, but that's 46% year-over-year growth. Energy generation and storage revenue up 74%. Services and other revenue up 47%. Total revenue up 47%. Now the gross profit's up only 7%, and that total GAAP gross margin is down 682 basis points. You can see operating expenses have increased at 21%. So overall solid. Total revenue grew 47% year over year in Q2, almost $25 billion. So operating income decreased slightly year over year to $2.4 billion in Q2, resulting in that 9.6% operating margin year over year. Let's talk about capacity. So Q2, we produced a record number of vehicles thanks to ongoing ramps at new factories. So in the United States, California, Nevada, and Texas. At Gigafactory Texas, in addition to the continued success of Model Y ramp, we are also working on equipment installation for Cybertruck production, which remains on track for initial deliveries this year. Shanghai, China. Since our Shanghai factory has been successfully running near full capacity for several months, we do not expect a meaningful increase in weekly production run rate. Gigafactory Shanghai remains our main export hub. And then Europe and Berlin, our factory in Germany, produced standard range Model Y vehicles in Q2 for the first time. You can see the production up here, and you've got the Tesla Semi coming up here. That's pilot production right now. You've got next gen platform, it says in development, and then the Roadster to be determined. And then Cybertruck up here that says tooling, so getting really close. This is market share of Tesla vehicles by region, and you can see this number has gone up quite a bit, especially this blue line here, which is US and Canada. This is also an impressive slide talking about AI. And we talk about Tesla, it's not just a car company. It's not your mom and dad's car company. This is an AI company. So 4 main technology pillars are needed to solve vehicle autonomy at scale. Extremely large world data set, neural net training, vehicle hardware, and vehicle software. And look at this here, cumulative miles driven with FSD beta. This is in millions. Look at that ramp from 2021 to current. And we're approaching 350 million miles driven. So if you're curious about the services and other businesses, this is talking about second quarter of 2023 has been a quarter of supercharging. A significant number of companies, including Ford, GM, Mercedes, Nissan, Polestar, Rivian, Volvo, and more, have announced adoption of their charging standard developed by Tesla over a decade ago. Further opening our charging network in 2024 will enable both faster market conversion from combustion vehicles to EVs, as well as faster growth for our charging network through a larger addressable fleet. And it is interesting here again that solar is down, and we have to keep an eye on some of those solar stocks. This is big volume. We're planning to grow production as quickly as possible in alignment with their 50% compound annual growth rate target. They've been guiding that since early 2021. In some years, we may grow faster, in some years, we may grow slower, depending on the number of factors. For 2023, we expect to remain ahead of the long-term 50% compound annual growth rate with around 1.8 million vehicles for the year. Now, if Tesla does not cut prices any further, I think this might be the bottom in terms of margins. I think those margins are going to start to improve from this point. And if they can continue to produce record amounts of production and deliveries, improve those margins, especially if they're going to spend maybe a little bit less money in certain areas, I think that those margins are going to go higher from here. Now, next I'm going to look at a chart, and I'm going to show you where I think the stock might go. Before I do that, if you're new here, subscribe to the channel, click that bell for notifications. We're going into earnings season. I'm going to be doing a lot of videos like this. You won't want to miss those. So make sure you subscribe and click that bell. If this is helpful, drop me a like and drop me a comment. And I need to announce that this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, Fool does not tell me what to make, what to tell you guys. They're a great partner. And if you want to join our private community, Patreon Discord, visit patreon.com/firedupwealth. Now, every single Wednesday, we do what's called Chart Day in Patreon Discord. When you see orange, that's a previous chart day. That's commentary from a previous chart day. Yellow is today's chart day. So we did chart day this morning, and Tesla was actually on that video. And my comment was that earnings are tonight. So we really have to see what the earnings are going to be. I mean, the technicals are showing that the stock wants to go higher, but if there's a big earning miss, this, the stock's going to sell off. I said the upside would be $300 at first, that I could go over $300, and that R3 is up here around $323. Now, if it were to sell off, that first support level is going to be around 275 where this blue line is. And if it breaks down really heavily, these moving averages are way down here. These are Fibonacci pivot points, and this is a Fibonacci retracement. This is the 50-day SMA. It's a simple moving average. The red is the 100, purple is the 200. And you can see it's ripped hard. I mean, it's almost parabolic. This stock was $101.81 at the beginning of the year. It popped from $101.81 to $217.65, sold off a little bit to about $152, and then rallied up here close to $300. So right now, post-market, it's actually green. It's $292, so it's up slightly. It closed at $291.26. I think if the momentum continues, now we are going to have mega cap tech earnings next week, and that could cause a market sell-off. I mean, things are overbought. In fact, the RSI in Tesla is over 70, so it is getting into overbought territory. Hopefully you're buying the stock lower, 101 to 150 in this range. So update here, I'm editing this into the video. The video is already done, and I came back and I added this in because the earnings call is going on now. On the company's earnings call, CEO Elon Musk said we continue to target 1.8 million vehicle deliveries this year, but expect Q3 production to be a little down because we've got summer shutdowns for a lot of factory upgrades. I think this is part of the reason for the sell-off. The stock was basically flat. There were a couple things on the earnings, so margins is a concern. I think the market was digesting that. There's a couple things going on here. Number one, this comment basically telling you that production might be down in Q3. So Wall Street, they're thinking about 6 months, not 6 years. They might sell off a little bit and say, hey, we'll come back to this later. It's had a nice run. And the stock is expensive. It's had a huge rip from close to $100 to almost $300. And the RSI is over 70. So on the technical analysis here, I'm telling you that the stock could go higher, I think, this year. And I think that's still possible, but it's not going to be in a straight line. It could consolidate a little bit. You saw some of those support lines. 275 is that support level, that first support level. It could go lower than that. And I think if it goes back in that 250 range or under, that's the area where I would dollar cost average longer term for a long-term investment. And I think this could be back in that $1 trillion market club here in 2023. You might even see it as high as $325. Now, I'm not saying you should go necessarily buy it hand over fist, and it's not a cheap stock here, but I do think from the technical level, it's going to go higher, especially if investors digest this earnings and decide that the margin trough is in. If you're new here, make sure you subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment, have a great rest of your day. Take care.